right, welcome back to Dirty Boots Capital. Today we have a celebrity with us today. We have the Uneducated Economist, Simon Karen, here with us today. Welcome back, Simon.
Well, thank you for inviting me on, Tony. I really appreciate it.
Today I wanted to talk a little bit about potentially the incoming recession that we might have, in the next year, 2 years, 3 years, who knows, right? None of us have a crystal ball, but, just kind of talk through that a little bit with you and kind of get your views onto what you see happening. So one of the things I've looked at, and I'll share my screen on it, is GDP, right? Gross domestic product in the US, and whether that's a predictor of a recession. So I'm going to share my screen here. So this is the Fed chart, gross domestic product. And you see here where we've been. So this was the pandemic, right? We took this dip here in 2020, right? And then GDP shot up because the lockdowns ended and people got out and they spent more and more productivity happened after being shut down for so long, right? But you see it kind of dropping off here. And so what I'm wondering, Simon, is this drop off a potential predictor for an incoming recession?
Well, I mean, it certainly looks like it from the historical chart of it, that when you start to have a downturn like that, it generally leads into a recession and doesn't really take that long after it. I would think with the great spike in GDP like that there would be some sort of drop off just to kind of be the market reaction from, such a significant drop to such a significant spike. But if that continues, that GDP dropping, well, that does certainly seem to indicate that we would be heading into a recession, at least just from the historical chart of things.
Yeah, I went back in time to look at, for the viewers, these gray bars on the chart denote a period in time when there was a recession, right? So if I go back in time here and I look at the mid 2005, we had a reduction in GDP happening, right? You can kind of see the downtrend start to happen. And then the GFC happened in the 2008 period, and we went in this prolonged recession here. And then if I go further back in time, right, in about 2000, we had a downtick in GDP, and then we ended up again in this gray region, which denotes a recession. And I can go back in time and take a look at these different periods, where we end up in a recession. It doesn't always prove out. Like here, Simon, we were in a downtrend in the mid 80s, and that didn't bring us into a recession. There might have been some other economic forces at play, but every other time I look at a downtrend in GDP, it looks like we end up into a recession. So I don't know if this is a crystal ball or not, but
something I'm kind of noticing as I look at this chart again, it looks like in the early 90s, it looks like there was a recession. In the late 90s, the great financial crisis, it looks like the recession started when the GDP hit, what is that, 2%? What is that number right there? I can't see it.
Like right here in the early 90s?
No, like right at the very beginning of the recession. So like you're kind of at the bottom. Yeah, like right at the very beginning. What is that? So GDP right there. That
here, is it's showing up as like 7.8.
Right. And then what is it like? It looks like the recession started almost at the same time when the GDP hits that. GDP hits the same.
Yeah. So here in the 2000, it was 7.6, call it. Right.
So that's when the downturn of GDP started. But when the recession actually starts, what's the GDP then?
3.4. And over here in the 1990s, it was 5.6.
Okay. And what was it during the great financial crisis?
3.4. So here 3. It was 3.4. Here it was 3.4. And here it was 5.6.
5.6. So that's kind of interesting to think, like, it hit 3.4 to start the recession 2 times in a row. And then what was it over just recently? What was the GDP when this time?
Yeah, it was like 0. It
looks
like. Yeah, it looks like 0.
It almost seems to me like if that GDP falls to somewhere around 4, I'm guessing that's probably going to be a pretty good end. That's probably when a recession is going to be starting, I would assume, just because of the historical chart of it just kind of dawned on me as I was looking at it that it seems to be when the recession starts, when that GDP hits between that 3 and 5, at least from going back to the 90s.
So that's a watch item for us, right? So we'll keep watching that. This is an article from inflationdata.com. It was written back in 2011, right? So it's not like it was written yesterday when, all this inflation's been happening recently. This article goes back in time, and they looked at a correlation between recessions, when recessions happen, and inflation. And they went back all the way to 1914, right? So does high inflation cause a recession? In a way, yes, but it precedes the recession. So it doesn't happen concurrently with the recession. It precedes. Inflation precedes the recession. Usually, high inflation corresponds with liquidity creation and a booming economy, right? And so what have we had recently? We've had liquidity per the Fed, per the Treasury, right? And a booming economy. And we've had a great economy, right? With corporate earnings coming out higher than people had predicted. Housing market is good. The stock market is good, right? So we have this booming economy right now. But after a while, the party balloon can get no bigger and it eventually bursts. Liquidity contracts, which I think we're seeing now with higher interest rates and less Fed involvement, right? Inflation falls and the economy contracts into a recession. Do you think there's truth to this?
Yeah, absolutely. It seems to be the case that occurs, just like any kind of cycle that's out there. As the economy starts to downturn, they lower the interest rates to get the people to go out there and borrow money. As they borrow money, they start spending that on houses, cars, vacation, doing whatever. That is money that is not earned, but money that is newly injected into the economy. So as this money starts to flow through, it's going to start causing the asset prices to go up, as you're seeing right now. I mean, if you put a limitation on anything, then you're going to start seeing, either one direction or the other. Now, if you put a limitation on the amount of houses that are out there, then you're going to see the house prices go up. But if you put a limitation on the amount of money that you can get out there, that's a whole nother story. And that's where the recession talk comes from, is that as they start to tighten up this money supply, as they put a limitation on money, rarity, I guess, of it is going to cause the asset prices to come to try and find the ability of people to be able to take out a loan. So as the inflation rises, and the combating of that inflation rising with higher interest rates is going to make it more difficult for people to borrow money. And if it's more difficult for people to borrow money, then they won't be able to pay the higher prices on the assets. And that's really where the recession starts to come in, is people will start to drop their prices on the assets in order to find the buyers. Yeah. And, that's where it starts perpetuating itself, because if you're seeing prices fall, then that starts causing the expectation to continue, and people start backing off from the purchases. You don't want to buy a house and then watch the price go down. So if you think that the house prices are going to be going down, that will, cause more people to not want to buy houses.
So based on what we've looked at, right, and based on that article, so far signs are pointing towards a recession at some point in the future, right? I don't know if it's 6 months, a year, or whatever it is, but kind of looking like recession is coming inbound here.
It really does. I mean, especially if you look at the flattening of the yield curve and stuff like that, those are indicators of recession coming. People are getting fearful of tying their money up for the short term because they feel that there's going to be a downturn coming into the market. I mean, for the viewers who don't quite understand what a yield curve or flattening of the yield curve, it's just like taking out a long-term mortgage as opposed to a short-term loan. The short-term loan is going to have a lower interest rate to it than the long-term 30-year mortgage would. But if you're fearful of the future and you don't want to tie your money up, then you're going to demand a higher interest rate for your short-term lending that you put out there. And that's really where the flattening of the yield curve begins to happen. As people do not want to lend the government money for the short term, they want to hold on to that cash. The interest rates, or the yield that those bonds begin to pay, starts to go up because the prices are falling, because the investor is not going into it. So those yields will continue to rise. Now, on the far end of things, down out 20, 30 years, although you're seeing the yields rising out there, they're not rising nearly as fast. So they're not nearly as fearful of the distant future as they are of the current future. And that's really another indicator of recession, because what it's doing is it's giving the market perception out there. What is going on? Well, we're fearful. And if you're fearful, then you start holding on to your money and you don't want to spend it as much. You don't want to take out the loans and stuff.
You and I were talking about the labor market. And so that it's all, as you talk through, the last, minute or two there, it makes me understand the labor market a little better in terms of, incoming recession. People start to tighten up their spending because, they're fearful with things. Maybe they don't buy that house, right? Maybe they don't buy the car. Maybe they don't buy some luxuries, right? And so what does that do to the labor market, right? Companies aren't going to need as many workers, right? So I'm going to share this chart, this labor chart. So this is a chart that shows the labor market index, and they indexed it back to July of 2009. And this is data from the BLS, Bureau of Labor and Statistics, right? So it's a governmental agency chart, right? Or at least the data comes from the agency. So you see what's happened here with all jobs. So these are essentially openings, vacancies is what they're measuring here on this chart. And so the vacancies in job openings has gone up. As we all know, right? Everybody's hurting for labor. They're trying to find people to fill spots and, all sorts of different companies, right? And this is all jobs here, this blue line. And then this gray line represents the construction industry, right? So think housing industry and, those jobs there, right? So if we go into a recession, we're going to need less of these folks, right? Less of these job openings are going to be available. So this chart is going to start to normalize. I'm thinking.
I would think so. I would think so. And I mean, as far as normalizing goes, I mean, it could drop quite a bit to become normal, right? I mean, as far as that goes, as far as the job openings, I mean, I think about like when I got my job, I was lucky to get hired on at just over minimum wage. I was in competition with other people, and if you screwed up, like you decided that you weren't going to show up for a couple of weeks in a row, like a day or whatever, and a couple of weeks in a row, you just call in sick. Your job was kind of on the line, I mean, you had to be there for it, and nowadays, it doesn't seem like there's even that big of a concern having a job or retaining a job or getting a job. It's just like these things are like there's so many jobs out there, nobody really cares about it. So it makes me wonder like what happened. And I really honestly think that COVID had a lot to do with it as far as the restrictions to the economy. A lot of people decided that they were just going to retire early, get out of the workforce. And there's such a huge amount of people coming into retirement age that it probably really just pushed out that demographics of people who were in the labor force just simply just are not coming back because they're done. Yeah. And then also at the same time, there wasn't a lot of training taking place as like the social distancing and lockdowns and all that were happening. There wasn't a lot of people who were like getting trained for positions or jobs. Yeah. I can imagine that there's probably going to be some constraints to the labor industry for some time as this does begin to normalize. I mean, just the amount of construction jobs that are available out there is just astonishing to me, really.
Yeah, we were talking a little bit about the, how screwed up the economy is, not just with the inflation, right? Because, I mean, can you imagine these poor contractors and small business owners, right? Just any small business out there, right? Dealing with inflation, and what they paid today and priced their jobs on today is going to be different tomorrow, right? It's going to be higher. They don't know how much higher, right? They don't even know if they can get the materials, right? So a week down the road, a contractor goes to buy the material that he priced a week ago for that job, and now the prices are higher, right? So he's going to lose out on profit, right? And that's just him having to deal with the pricing of goods and being able to make a profit. Now you look at the labor side, right? And, where you say, there's people who are just willing to sit at home, right? And not go to work, or go into work sometime, but not all the time. And, this consistency of knowing whether your labor is going to come to work to swing a hammer or not. I mean, that's kind of a suck. I mean, how do you run your business that way? I mean, these people who are typically older are saying, I don't know if I want to do this anymore. This is too hard. When does this end? And they just shut down the business and they start either collecting Social Security or they go work another job.
When I was younger, I had quite a few friends who started off with like, a little beat up pickup truck and a handful of air tools, and now they're huge. They're a big company. Yeah. And to try and start a company like that today, where you can actually, I mean, the difficulty inside of that is just so unreal. So even getting like new guys into the game is is like, it's going to continue to have this, issue with the labor just by having professional people, so
Yep.
I think a lot of this is going to end up getting concentrated into the bigger hands.
Yeah, no, so I have a similar story about, one of the bigger guys being able to survive. I shouldn't say guys, a bigger company being able to survive. Actually, they were on a podcast, and they were saying how, because some of the smaller companies, construction companies, are going out of business, that is freeing up some material and some labor for these larger companies to soak up, right? So if these smaller companies are purchasing less of that material off the shelf, there's more availability for these bigger guys to go in and purchase it, right? And if those laborers in the smaller companies no longer have a job because the company closed down, right? The small company closed, those laborers are now available to those larger companies, right? So he was actually saying, hey, we're actually kind of benefiting right now because we are finding laborers and we are finding material on the shelf. So I
Because the middle guy's going, wow.
Yeah, I found that very interesting. So that's
Yeah.
a little bit of a dynamic. That's in the Florida market. So
Is
that
it?
was
Yeah,
interesting.
yeah, I need to do more research into the Florida market, because there are some things that are happening there that I feel that is going to start taking place throughout the rest of the country. Especially with that concentration of jobs going to the bigger guys and the smaller guys just basically exiting out. That's kind of scary to think about, because
Yeah,
there
yeah.
was a time that, all houses were built by, that dude over there,
Yeah, yeah, you didn't have the
that,
huge Ryan Homes or Lennar or, some of these mammoth companies, right? You just didn't have them. And now they're, yeah, I don't know how you're going to be able to survive unless you're a mega company like that. Yeah.
it's like you can't. It's just like, it's almost like it's over.
Yeah, it's funny. I kind of relate it. So I'm in real estate. I've purchased apartment buildings and things like that, and I look at just the industry, what's happened to the industry, and how difficult it has become in the last 20 years to get into the industry. And so I look at it and I say, man, is the next generation gonna be able to get into the multifamily business, right? I got into it because it was a second source of income for me, right? I worked my day job and then I did, repairs after work and stuff, right? So it gave me a second income, to fall back on, which was great, but it's getting harder. So I don't know if that next generation that's coming up is going to be able to have that same opportunity I had. And so now, as we're talking through this, Simon, right? As we're talking through this, I'm kind of thinking the same thing. We had the ability to create some of these small businesses, construction companies, remodeling companies, restaurants, right? Retail shops. Is that going to be an option for the next generation, or is it only going to be available to these mega corporations, or maybe not mega, but larger corporations, right? There's going to maybe be a barrier to entry there.
Yeah. It does make you wonder. I have a friend who has 2 restaurants. She shut one of them down because of, the lack of available staffing. She moved what little staff she had left over to her main restaurant. And even that is now difficult to try and maintain.
Wow.
She was intending on opening up the second one again, but it just looks now that she's probably going to have to just abandon the whole idea. Which kind of sucks, because she's been trying to keep that building, keep the stuff there to fire the business back up. But yeah, it just doesn't seem like it's going to happen. I know, like in my area, I try to seek out the local provided stuff. Like I want to go, I don't seek out corporations, but then I'm in an area that doesn't have a whole lot of like stuff like that going on. So, we have a lot of shops, a lot of small shops, a lot of small time, restaurants and, local stuff. I think if that was to become a trend, then simply like people avoiding the bigger corporations or seeking out like the contractor who is not one of the bigger corporations, or not buying houses from those particular ones, how people would get into that mindset is beyond me. But I think that if people were to notice something like that, then yeah, that would have like a change on it. But really, ultimately, it seems to be heading into the concentration of power into the bigger hands, in every way.
Yeah,
Um,
It's unfortunate. I want to share these couple of other labor charts. So this chart is it talks about the labor market and manufacturing compared to construction. So here we have the same issue. Manufacturing is having just a hard time like construction finding workers, right, for the manufacturing. And so again, as we go into a potential recession, right, this chart should start to normalize back down. This should come back down to what looks to be about the 300 mark here, 300, 400 index. So yeah, and then so that's manufacturing, and then this last one here is they compare the purple line here is transportation, warehouse workers, and utility workers, right? And wow, look at it from looks like October of 2020. The need for those folks has just shot up incredibly, right? Probably even faster than the construction workers. But all the industries look like they're experiencing the same sort of shortage in labor, right? It's not just construction, right? We hear a lot about construction because the housing industry is in such a boom right now. There's a need for all this housing, but it seems like every industry is in the same boat. And I just wonder what's going to happen with those smaller size transportation businesses, those smaller sized warehouses, right? Are those going to go away, much like the small remodeler or the small home builder? I don't
Well,
know. I mean, I hate to be doom and gloom about it, but I mean, that's one of the things I think we all got to do is kind of look at some of this data and try to forecast it out in time.
well, you think about it, like what could possibly happen with this? Like if we have this labor shortage and that warehouse, that smaller business, like not the big guy, but the guy who's, who doesn't have the buying power, has to start raising their rates and everything that they charge because they have to pay their laborers more.
Yeah.
Well, they start paying their laborers more, the laborers get accustomed to that, and then we have a downturn. They're stuck in a position in which they have to pay these laborers more because they're growing accustomed to it, but yet there's a downturn in the markets that really puts them into a tighter squeeze. So it's almost as if they're going to be forced out. Like if they cannot maintain, where they are as far as keeping their things functioning, but if they can't find the labor, they start raising, that's going to create a problem down the road, because there's always a downturn. At some point there will be, and they could find themselves stuck at paying higher prices but just can't get the income, and
Yep.
that's when businesses start to fail.
So we covered GDP and we covered labor and what that might all look like in the future here. The last thing I want to talk about is the largest commodity in the world, oil. Right now, we're sitting in I think the low 90s right now for a barrel of oil. And there's talks about it going over 100, maybe 125, $125 for a barrel of oil. If it does that, what does that do to businesses, right? And then particularly small businesses like we've been talking about, right?
Same thing. What's going to end up happening is that the input costs going into their manufacturing, into their transportation, into their business of whatever it takes, that goes up. I mean, the cost of oil pretty much results into everything that you buy. And so if the price of oil begins to go into these businesses, they're going to have to raise their prices. Well, the same thing's going to happen with the economic activity out there, is people are going to end up driving less. If they have to drive more, they're going to spend less.
Yeah.
That's going to be a slowdown to the economic activity. So even though the oil prices go up, which is going to cause like an inflationary pressure, the results from that will be economic slowdown in activity, which is going to, again, start putting downward pressure on prices and everything else as people are spending less and just, doing less stuff.
Yeah.
So I think at first it's going to cause prices to go up, but then the results of it will be less economic activity. There's so much beauty in this life that you should be enjoying, but you can't be blindsided by the stuff that's going to come, because it is going to come and you have to watch out for it. So you can enjoy the river, just know that it's dangerous.
Yeah. No, that's a good analogy, right? And I think everybody can relate to that message, right? So, for all the viewers out there, we're just trying to help everybody out there, all the viewers who are listening to this and hear us go back and forth, and we're just trying to make sense of it best we can, just like everybody else. And we're trying to bring that information to you as timely as we can. right?
Yep.
Go ahead.
And that's another thing. Like, you know, if we're going to talk about the doom and gloom, we should also talk about fear. And that's really where it comes from, is like, you know, this doom and gloom comes from a base of fear. And that's where like the real problem begins, because if you live in fear or you're in this constant state of fear, what ends up happening is that it pushes your energy out to the extremities of your body. Now, I'm not like some crystal gripping hippie, whatever, you know, but everybody knows, like, when you walk into a room and everybody's in a good mood, you can feel that energy. If everybody's in a bad mood, you're going to feel that energy when you go in there. So all of us have it in us. And a lot of people are more sensitive to it than others. But if you live in a state of fear, what it's doing is it's pushing your energy out to your extremities. It's putting it in your hands and your fists and your legs, and you're ready to either fight or flight and be in this constant state. Well, that's a negative energy that is being exuded from you.
Yeah.
Now, if you reverse that and you bring it into a positive, and you bring that into your core, and you bring it centered, and you think of like love and peace and happiness, and you bring that energy to your core, well, that's going to be a positive that's going to attract positive things towards you. So it's okay to understand the fear, but you don't live in it. You don't live in that fear, you know, because if you do, you're going to be in a constant state of negativity, and that negative stuff is going to start flowing to you. Got to be centered in peace and positive. Yeah.
Absolutely. I appreciate your time. If you could let the viewers know where they can find you.
Yeah. I'm pretty much active on YouTube. I do have all the social medias out there. So if you know, prefer to be on Twitter, Facebook, or whatever, I do have all those. But I'm pretty much active on YouTube. But if you wanted to send me a message, you know, send me an email. It's uneducatedeconomist@gmail.com. I try to respond to all the emails, you know, especially if they're asking me a question. But I do certainly read all the emails. So yeah, if you want to send me a message, that's an easy way to kind of get a hold of me.
Yeah, and for anybody out there, if you're not following Simon, the Uneducated Economist on YouTube, you're doing yourself a disservice. So get out there on YouTube, look up the Uneducated Economist, give him a follow, watch his videos, extremely helpful. So yeah, do yourself a favor and go do that. All right.